Man, this recession of 2022 is really gonna set me back. Now I can't buy any deals because prices are going down. There's a lot of risk in the market. I'm just gonna sit on the sideline.
What's up, real estate investors? My name's Hayden Crabtree. Today, we're gonna be talking about why 2022, even though there is a recession, is still an amazing time to buy real estate. But before we do me a favor, hit the like button, subscribe to the channel. I would really appreciate it. We're trying to grow this channel and we're dropping 2 new pieces of in-depth real estate content every single week. I know you'll love it. I know you won't regret subscribing. That being said, let's dive into the video. Guys, let me tell you something. Right now, 2022 is one of the greatest opportunities that there will be in order to actually buy real estate. Now, I actually think that the window of opportunity is not huge here. I mean, I think that there's always opportunity in real estate. But what I'm saying here is that I believe that the recession that is to come, the recession that's caused by our Federal Reserve raising interest rates, driving the stock market down, is trying to battle inflation, right? That is the main thing that it's doing. I'm a big believer that it's not gonna be possible. And the reason I think it's not gonna be possible is because the biggest debtor in the world is the United States of America government. Or, you know, as we watch this video, if you're inside the US, you go, yeah, the government. Guess what? The government is just all of us. All of us as people, we are the world's biggest debtors. And what do debtors have to do? People who owe money, what do they have to do? They have to pay interest on that debt. Well, guess what? As interest rates go up, our debt's not going anywhere. Our debt has no chance of going down. I mean, we could raise taxes, but if you raise taxes on the rich, you know, that doesn't work, right, guys? And nobody in the middle class wants to pay higher taxes, so our debt's not going anywhere. Our debt is not going down anytime soon as a nation. But if interest rates keep going up, which they have to fight inflation, then the US government has to pay higher and higher interest costs. We're already in a huge deficit. How are we gonna pay for those higher and higher interest costs if we're already in a deficit? Here's how we're gonna do it. We're gonna print more money, right? And so I think over the long run, the printing of money is gonna cause inflation, and that is really our biggest risk. Now, who wins whenever inflation occurs? There's 2 people who win. Number 1 is real asset owners, people who own things, right? I'm looking around for something. You know, here's my car keys. I own a car. The car will become more valuable in terms of real dollars. And that is a real asset. I'd prefer for it to be a piece of real estate or gold and silver. Those are real assets. People who own real assets, who own buildings, businesses, commodities, things of that nature, those people win in inflation. The other people who win in inflation are debtors, people who owe a lot of money. I got a couple million in debt. And essentially, every time inflation occurs, the real value of that debt goes down and down and down. Let's say I have $100,000 today, and I go out and I buy $100,000 worth of gold. Let's say at the same time, I also take out a $100,000 loan against that gold, okay? So effectively, nothing changed. I moved my $100,000 into $100,000 worth of gold at that time, and I also borrow $100,000, so I still have $100,000 of cash. Well, guess what? As inflation occurs through time and the value of, let's just say gold tracks inflation, which it's up and it's down. I don't want to argue that. Over the long run, gold does better than inflation, okay? I know that, you know, we've got some crypto boys on here that want to argue about gold and Bitcoin, but I'm not here to argue about that, right? What I'm trying to tell you is let's just say that gold tracks inflation. It's a real asset, you know, that tracks inflation. If we look up in 10 years, okay, and let's say that the debt is still there, let's say it's interest only, whatever. If I look and I sell my gold and it tracks inflation through time, say my gold's worth $150,000 and my debt is still at $100,000, I can net profit $50,000. That's because I bought real assets and I took out loans whenever inflation occurred. And the best way to do this, guys, is through a productive asset, as Warren Buffett calls it. A lot of people call it, and it should be. It's productive, it produces things. It's like a cow that produces milk. A rental house produces cash flow. A business produces goods and services and produces profits. So if you're thinking about, oh, this recession is a bad time, listen, I think that this recession is gonna go down, as all things do, until they start to go back up. And you wanna buy whenever people who are worried about the recession want to get out. People who are over-levered, people who are near the end of their business plan, people who are near the end of their business life. I talked to a buddy of mine who's a banker, called him up. Say, hey, I just want to see how you're doing because I know interest rates are up. I know a lot of people are kind of pausing. He said, no, Hayden, that's absolutely not the case. What we're seeing more than ever is not so much real estate transactions. We're seeing more business transactions than ever because there's this huge glut of baby boomers who are nearing retirement age, and they're looking at this market, the top of the market that we're at, and they're saying, I was planning on getting out in 3 or 5 years, but I think right now is the best time in order to do that. And so with that being said, there's a lot happening on that side. There's a lot of people who own property real estate who are saying now's a great time to get out because they think it'll be lower in 3 or 5 years. Well, guess what? It may go lower in 3 to 5 years. Actually not sure that it will. It may go lower for a year, maybe 2 years. And then I think that it's gonna go up and up and up as inflation continues to bite us in the butt the entire decade. So one person I listen to is Peter Schiff. Okay, if you've ever heard of Peter Schiff, he's an economist. He's written a couple of books. Not a lot of people agree with him. You know, people like to joke that he's called 10 of the last 2 recessions, meaning that he's a person who always says, recession's coming, and then eventually you're right because you say recession's coming for 10 years. But one of the things that he pointed out is that if you look back to when inflation was worse, which was in the 70s and 80s, that inflation happened for an entire decade. But the big difference between what happened back then and why we were able to raise interest rates and why we were able to fight inflation by raising interest rates, and I got up to 15, 18, 20% on interest rates for mortgages. One of the reasons that was able to happen is that the US government was running a surplus at that point, and we were also exporting more than we were importing. We were a producer nation. Well, today that can't be said. We import way more than we export, and we're not currently running a surplus. So fundamentally, we're at a different time. It's going to be much different for us to fight inflation now than it was for us to fight inflation back then. So with that being said, why is now a great time to buy real estate? I think that inflation is going to continue to be a problem. I think that if we look at where interest rates are today, anywhere from 5, depending on when you're watching this, anywhere between 5 and 7.5%, depending on your credit score, your experience, what type of asset you're looking at. Those are normal interest rates, guys. I also think that if you buy in the right market, you're going to continue to see an increase in demand. You're not going to see a drop in rental rates. And of course, this is big picture, right? I'm talking about, I love to invest in Florida. If you're investing in Texas, the Southeast, Arizona, wherever where populations are moving to, real estate is still a supply and demand game. It's all about who's coming in, who wants to rent what you have, how much of what you have out there is in competition, supply and demand. So with that being said, knowing one, to buy long-term cash flow deals. Number 2, that hey, I may buy this thing for $500,000 today, and sure, maybe a year or 2 years from today, this is gonna be worth $450,000. Maybe I'm not gonna crush it, right? But if you're a skip the flipper like I am, you're not worried about flipping it a year or 2 years from today. What I can say confidently is that if we think about 10 years down the road, properties will be worth more than they are today. It's just cycles, right? Everybody wants to talk about, don't buy, wait. But listen, you can never time the bottom of a market. People right now are definitely wanting to get out. It's all about buying right in the right markets, at the right price, with the right debt, and at the right time. We want to buy at the right price, a price that cash flows. We want to buy with the right debt that's fixed interest rate, long-term debt, minimum of 5 years. Get as much of it as you can, but don't go out and get variable rate debt, and make sure that there's no covenants in the loan. Some commercial deals have covenants, where, for example, if your debt service coverage ratio, which if you don't know what DSCR is, I've got a video right here that I'll link to it. You can learn about DSCR. Very important number as a real estate investor. That video will talk to you about, kind of how to calculate it. But if that falls below a certain metric set forth by your loan provisions, they can actually call that loan due. So we want to make sure that we don't sign up for anything like that. I just want to emphasize with this video, when a lot of people are pumping the brakes, you should be taking massive action to make it happen, because there are a lot of people out there right now. I've seen it. My brokers are telling me about it. I'm seeing it in the market, is that people are saying 6 months ago, hey, I would have taken 10 million for this deal. They're saying now, I'll take 6 million for this deal. So there are a lot of people out there getting retraded, which that means is, hey, I want to buy your storage facility from you. And you say, okay, great, I'll take $1 million. And then we say, okay, great, let's sign an agreement. And we go 30, 60 days down the road, 2 weeks before closing, I come to you and say, hey, I know the deal is for $1 million. I can only pay you $800,000 right now. people are getting retraded. That process of going from $1 million to 800,000 are getting retraded like crazy, and then they have bad blood for that person, so they tell that person, no, I won't sell to you for $1 million, and then what was a deal that went under contract for $1 million is now available for 800,000. You know, side note to all of this is you'll see a lot of people talking about home values are falling, real estate values are falling. Guess what? The $1 million was too high of a price anyways. The deal was only worth 800,000 on reasonable terms anyway. So they're just kind of coming back more towards reality, but you are catching some people who are willing to go below that inside of a panic. And that's why I think 2022 is a great time to start real estate investing. It's a great time to start building your skills, to take action on finding off-market deals, building relationships with people with money. Because if one thing is true in all of this is that there is still a ton of money in the system. All that money that we printed, you know, in 2020, that money's still out there. You know, some of it's been placed inside of investments, some of it has evaporated as the stock market has fallen, but there's still a tremendous amount of liquid cash out there looking for an inflation hedge, looking for something that produces cash flow, looking for something with tax benefits, and looking for something that over the long run is gonna earn a good return. And I think the answer to that is real estate. So if you guys have any questions about being an investor in 2022, do me a favor, drop me a comment below, ask me your question, happy to answer it. If you like the video, hit the like button, subscribe to the channel, and I'll see you in next week's video.